You are listening to ChartingWealth.com for Friday the 7th of July, 2017. Now we see that the markets are all down today. That is the QQQ, that is the NASDAQ 100, the S&P 500, gold is down, and TLT. Bonds are down. Everything is down for the day. Of course, stocks are down the most. The NASDAQ down 9.91%. And the S&P 500 0.90%. We'll continue to go through these charts, explain to you everything that's going on. I've been responding to a lot of your emails today. I have a number of people email me constantly asking me questions about how do I learn what you are doing? What kind of resources do you have? Well, if you subscribe to the Daily Market Review, all the resources you need to get started are right there in the first email sent out. It's the email everyone gets every day. It's got all the links to the Daily Market Review itself, the video. It also has the How to Read a Stock Chart video link, the link to the trade worksheet, the daily market worksheet, the weekly market worksheet, and the layout that we use at freestockcharts.com. All of those things are available to you for free. If you're currently using another charting layout, we don't have anything to send you beyond what we use, which we think is the absolute best at freestockcharts.com and TC2000. Please use the resource for free. And again, study what we do. Listen every day. Fill out that daily market worksheet, weekly market worksheet. We believe in on-the-job training. That is, spending 10 minutes a day going through these reviews, doing practice trades. I can assure you it is the only way you are going to learn how to do this. There is no magic lantern that you can rub and get market knowledge out of it. You've got to spend a little bit of time every day, not an overburdening amount. 10 minutes we can all do. And we will strive to finish this entire market review in about the next 8 minutes. And I thank you for your patience, folks. But again, please subscribe to the Daily Market Review at chartingwealth.com. Let's jump right in. S&P 500 down almost 1% for the day. Isn't our weekly worksheet, our weekly candle, it's just so beautiful when you see it working. We had that weekly vertical crossover going down on June the 23rd, and we see that it has continued to move down. We look at the 2-day, we see that it, of course, moved down on the 22nd of June. The 2-day always precedes the weekly. Why? Well, you have to have the smaller chart move over first, then the weekly came, and of course, it has continued to move down, slid sideways for a little bit, and then it's just started tracking down quite nicely as far as that 2-day candle goes. We see what we like to see. We see the derivative oscillator gaining more energy going down, and of course, over the course of the last day, we have seen indeed the PPO, the price percent oscillator, our main oscillator, the one we love the most, it has really accelerated down. Now, of course, the folks who aren't or have not listened to our training on inverse ETFs, how to make money when markets crash, we've reposted that under the training section at the website at chartingwealth.com. And what's so beautiful about that is as the S&P is going down, guess what you could get into? You could go buy something, again, a virtual trade, buy something like SH. It actually has been going up. It is the ProShares short S&P 500, which means that it goes up when the S&P goes down. We have shorts for all 4 of the indexes that we track. And of course, as we continue to watch this hone in on the 4-hour chart, we see that indeed the 4-hour chart has made that pullback. It crossed over going down beautifully in the morning. You had your jumping in point in the afternoon. The opening at that time was 242.09, went as low as 241.15, so a dollar there. Actually, no, went as low as 240.34, so about $2 there in appreciation over the course of the day from that jumping in point. So again, Let's continue to watch and see if this S&P does what we want it to do. It's nice to see the 4-hour crossover and have the derivative oscillator slide over at about the same time, just a little bit late. It's beautiful when they both happen together. But again, we are in a down trade on the S&P now after that short pullback and then movement down. And again, all these things, remember, we are in the summertime trading zone. Less volume in the market. The market's much more apt for fluctuations, sideways sliding. It's not the best time to be in the market, but again, we've got our weekly vertical crossover going down. We'll see how well this trade continues to move along. Okay, staying on the weekly chart, going to QQQ, down again, just like the S&P, about 1%. Of course, we had that weekly vertical crossover going down back on the week ending the 16th of June. And of course, if we look at our 2-day chart, we of course see that 2-day chart continuing to move down. And on our 4-hour chart, of course, we had a reversal and then our rotation over going down back on the afternoon of the 27th. And what have we seen happen since then? If you had seen that happen when that closed, you jumped in on Wednesday morning, sometime, well, right around 139 or so, 138, 139, you would have seen, again, beautiful price appreciation as the Qs has dropped all the way down to closing at the end of the day at 136.54 or so. Let's see, 136.54. So again, nice appreciation on the Qs. Remember, we have PSQ, which is the Q short. And of course, it's been going up as the Qs has been going down. So again, it's been working beautifully, and we are so happy to see that happening. And again, same caveat, summertime trading zone, just be careful. Be willing to take profits when you feel that you have done well enough, or you're actually seeing some definite signs in the charts as the need to do that. Now let's keep moving through. We go to TLT. Of course, we are not in this trade right now. Why? Well, of course, we're not in the trade now because we had a big slacking off and dropping off of price there after a nice run-up through June on TLT. And if you look at the 2-day chart, you can, of course, see that it's crossed over going down. And that, of course, has occurred after we had that beautiful run-up and then the drop over going down. Of course, we shot out of there sometime around the 28th or so. We'll continue to move through these charts. Of course, where are we with gold? Well, of course, gold, we have our weekly vertical crossover going down on gold that happened back on the week ending the 30th of June. That had been preceded by the 2-day vertical crossover going down back on the 16th of June. And of course, let's take a look at that prescient 4-hour chart. What do we see? The 4-hour chart has sort of flatlined on us. Yes, technically it was down 0.04%. Again, do we have a floor here? Don't know. Does have room to move down. Just back in May, it could go a little bit lower. But if we look all the way back in March, we see that it had dropped all the way down to 114.02 or so. So we shall wait and see. Pay attention to this 4-hour chart. If that 4-hour chart gives up the ghost on us, then look to retract your trade on that. Otherwise, hopefully, we'll see this continued down movement in gold. That is where we are, folks, as we end the day on Thursday, as we go into Friday, the 7th of July, this first trading week of July. We always appreciate you being with us. You appreciate what we do. We love to hear from you. You can always write us cw@chartingwealth.com. Our website is just that, chartingwealth.com. If you've not already signed up for our daily market review, what are you waiting for? It's free, and all that information we talked about at the beginning of the program comes to you as part of your subscription, which again is free. So we appreciate you. Thanks for tuning in. Thanks for all your comments. We get so much praise from you guys, and we so appreciate it. As you know, we provide this service without charge. We want you to gain knowledge on how these charts work. If you can do this, my friends, if you will spend 10 minutes a day, you can do this. It will take some time. It sounds real easy. Hey, just read a chart. If it's going up, buy. If it's going down, sell. Take your profit and run to the bank. It is more difficult than it seems, even though it's only a binary decision. Why? Because there's a lot of people competing against you. But if you will spend 10 minutes a day filling out that daily market worksheet, listening to us, filling out the weekly market worksheet over the weekend, doing practice trades on your trade worksheet, you have everything you need there to do this. And again, I have people contact us all the time. Yes, we do private training. If there are people interested in that, you can ask us about it. We'll check you out and see if it's something we're interested in doing. It is costly. But again, you don't have to do that. We don't pitch that. What we say all the time is if you just do what we tell you to do with these charts, and you practice every day, and only you can do it, you will eventually master this. How long will it take? Will it take months? Will it take years? It could. It just depends on how quickly you get this, how well you train, how much attention you pay, and whether or not you do this on a daily basis. Practice trade as often as you can. Fill out the daily market worksheets every day, the weekly market worksheet once a week. Don't overdo it, just do it. Persist every single day, 10 minutes. You will be amazed. God bless, my friends. Take care. All the best from the whole team here at chartingwealth.com.